Hi there, Tim Knight here, Slope of Hope. And I only did a video a couple of days ago, but what I wanted to say would be too clumsy to put across in pictures. I think I'm just going to show like maybe three charts. First one I want to show is the security I've mentioned many times, which is the Gold Miners ETF GDX. And this is something I'm very short right now. I like it quite a bit. As you can see by the horizontal line here, I've got the stop price. Actually, my stop is tighter than that, but that's a broader stop. But I think between the weakness of precious metals that I think is going to take place, as well as the weakness in equities, is going to be a 1-2 punch for this. And as a chart, I like it quite a bit as well. Now, as I've mentioned, sort of like the old phrase, we're all Keynesians now. Well, we're also all Forex traders now. And I don't think I've watched the euro quite as closely as I have over the past week. Now, this is a minute bar chart of the past 120 days, going back even to late last year. And what I was looking for, which I got enough today that I'm satisfied, is a little bit of a lift. Earlier in June, we had a couple of price levels here. The first at 1.2141 and the next one at 1.2108, both of which were broken on the 4th. And things kind of stabilized, and we got this little very modest rounded bottom. And I was looking for it to go really no higher than this, and more likely but to here. And it almost got there today. We had a pretty, in the scale of this, it looks minuscule, but zooming in, we had a pretty nice push higher, and then started to fall back again. So I think watching the euro is quite important. I'm also really fascinated by how the euro has decoupled from gold. They used to be very much lockstep, but there's plenty of times that the euro has been strong and gold has been weak lately, which I think is pretty cool. Now the E-mini is the item that I of course follow the most closely, and today was really, really interesting. When I got up and started the day, those of you who follow the comment section closely, my very first comment today before the open was how happy I was to see that the ES was up. It was up 8 at the time, and I had said I like the fact it's up because I've got this diamond long I can get out of at a profit, but also because it feels a lot like late 2008 again. By that I mean I actually prefer strong mornings and weakness throughout the day. You would think that I'd be very happy to see a weak morning. It's not the case. I'd really rather any strength, any optimism get out of the way early, like it did today. And as I've mentioned countless times, my charts tend to be very, very simple. I mean, the only embellishments you see on this chart is horizontal lines, which is the simplest drawing tool that exists, but I really like it, especially in this market, because this is the past few months of the ES on a minute bar basis. And we can see the flash crash here, gorgeous retracement back to this topping pattern. And we've been making a series of lower highs, and the lows are really queer looking. But let's look at the lower highs first. So we have one here, and then kind of a double top here, and then again today. So this has been a nice stair step pattern down, very, very reassuring to a bear. It just occurred to me that I'll just sort of rough this out. A trend line might be kind of nice there. Great. I'm going to waste your time while I draw this. I'm probably going to get rid of this anyway. But yeah, very sloppily drawn. But you get the point that it's been a nice descent, and it's even gotten so weak that the lower highs have not have come less and less close to that trend line, which I'll get rid of now because it's not perfect. Now, as far as the lows go, that's the weird one because the flash crash we had here, and then we had this one. This is the bit that's been giving me caution, which has been egging me on to do these silly hedges, BGU and spiders and DIA, that kind of thing. Sometimes they work, sometimes they don't. This morning it worked. I came in long the DIA. I sold it when the ES was up about 8.5. The ES kept climbing. It got up to what? Up 15, maybe even 16. So I sold it early, to be kind, but sold it at a profit. I bought it yesterday. But it worked out today, and it's nice to take some of the sting away from a strong morning, to have something like that. But here's the thing: these horizontal lines are just so key because they really help define where the something's wrong point is. And in this instance, even during this rise here in June, it did not cross that important line. And so he tumbled. And earlier I had asked myself, all right, how high might this go? And there was sort of three levels. To me, I've sort of tossed the whole getting back to 1140-ish type area. So I really set this level up as the highest it might possibly go, although believe me, if it went that high, I would be sweating a little bit. More likely, I thought it would get to about 1090. I thought that was a fair shot because looking at this pattern right here, a nice target would have been 1090 on that. And the lowest level I thought it might go was down around here, which interestingly was the best it could muster. This lift to not even 1080 was all it had before it just kind of pooped out. And as we can see here, a very rapid sell-off. And I'm talking after the close, obviously, and we're down another 2.5 at the moment. So anyway, long story short is that I think as we sit here now, the bears still are kind of ruling the roost. I would feel a heck of a lot more confident if and when we can bust below that May 25th low and stay busted instead of zipping right above it, because this is a higher low right here. Let's face it. And until we A, snap that, and B, snap this line, then we've got reason for concern. Setting that aside, my current portfolio is 170 positions, and the commitment is about 120%. I'll just say, what does that mean, 120%? What it means is that obviously I've got a certain portfolio. 0% would mean nothing but cash, which never happens. And 200%, which also has never happened, which means that I'm completely margined. 120%, that's up there. That's on the very high side of what I usually do. So just FYI. All right, that's it from me. And remainder of the week promises to be interesting. So that's it. Good night.